Hi, good morning, everyone. My name is Godmei. So, my sharing will be more on investment, not on the life journey like the incredible woman that we have today. So, hopefully, after the sharing, you'll learn something about investment, long-term investment. Okay, today, my topic will be building long-term value with ICAP.biz per heart. I believe all of us, this will be our major financial goal, right? We want to have a big house. We want to have a nice car. And we want to have, when we get married, when we have a family, we want to have that our children can have a good education. And we want to retire. When we retire, we want to retire without any worries, without worries about our financial condition. So how do we achieve that? So what we need to do is we need to have a long-term investment strategy so that we can build up our wealth and we can achieve our financial goals. How do we do that? What is important is we need to have a long-term investment strategy. There are major reasons, key important advantages of long-term investing. The first one will be it will allow the power of compounding to work. Like a snowball, when they roll down the hills, it will gather more and more snow and grow bigger. For portfolio as well, then you will have the snowball effect, meaning the portfolio will grow larger and larger and it can generate returns faster and faster. On the other hand, if you go for short-term strategies, they don't allow enough time for compounding to reach its full potential. What do we mean by that? Let's look at some example. If you look at this power of compounding return, if you start with 5,000 ringgit, for example, in year zero, you start with 5,000 ringgit, and you have a return of, let's say, 5%, return of 5%. So if you exit in year one, after year one, you invest and you have 5% and you quit, then your money will be only 5,250. So you only gain extra 250 ringgit. So it's not much. But if you hold it for, let's say you hold it for 5 years, then it will become 6,381. So it a bit more, 1,000 ringgit more. But if you hold it for 30 years, then your sum will grow to about nearly 22,000. So that is if you let the compounding magic to work. So you need to hold your money for the long term. But if you are so lucky that you can gain your annual compound return is 15%, then if you hold it for 1 year, then your sum will become 5,750. So you can have this one. But if you hold it for a longer period, for 5 years, then you double your money. For 5 years, you double your money. If you hold it for 30 years, then your money will grow 60 times. So that is the power of compounding. We can look at it in a graphical manner. Okay? In a graphical manner, you can see that from 5% to 12%, there's a gap of 7 percentage point. Right? 5% to 12%, 7 percentage point. From 12% to 15%, the difference is only 3 percentage point. But the end sum between 5 to 12 and the end sum between 12% to 15%, the 12% to 60% is a lot larger than the beginning sum. Okay, so that's the power of compound return. Albert Einstein say, compound interest is the eighth wonder of the world. So he who understands it earns it. He who doesn't pays it. So that is how important it is for compounding. The second advantage of long-term investing is reduced risk and volatility. So market doesn't move in a one way up. Doesn't move one line in a one-line manner. So it always go up and down. So if you are nervous, if you always, when the market down, you sell, and when the market is up, then you buy, it's not going to work because While markets can be highly volatile in the short term due to emotion and sudden news, the historical trend of the stock market has been upward over the long term. So if you hold it for a long time, it allows your portfolio time to recover from downturns, making it less susceptible to long-term market fluctuation. A lot of time we hear people are telling us, you buy low and you sell high, but it's impossible to time the market correctly all the time. So it's important to hold it for a long term so that you can recover from the downturns. The next advantage is lower cost. Okay? If you frequently buy and sell, then you incur more transaction costs and more brokerage fees. So therefore, your returns will be lower. The fourth advantage is emotional discipline. Okay? The long-term approach helps eliminate the impulsive and emotional decision driven by short-term fear or greed during market swings. Investors, they can focus on companies' fundamental and long-range outlooks rather than daily price movement. So it does not require constant market monitoring and decision-making. Why this is important is because if you constantly monitor the market, you constantly buy and sell, you have to make decisions when to buy and when to sell all the time. And you would run into this problem of reinvestment. Why is reinvestment a problem? A lot of people have overlooked this, but it can harm you financially. Okay, let's look at some example. It is always easier to lose money than to gain. Okay, for example, if you start off with 10,000 ringgit, for example, you start off with 10,000 ringgit and you are so good, so lucky, you gain 100%. So your sum grows to 20,000. Okay, but you only need to lose 50%, half of it, then you are back to square one. You are back to 10,000 ringgit again, right? And another example, let's say you also start with 10,000 ringgit and you are even better, even more lucky, and you gain 200%, right? So your total sum may become 30,000, right? But if you lose 66% of it, then you're back to 10,000 again, right? So it's always easier to lose money than to gain, right? And what is the probability? What is the probability that you can gain 100%? And what is the probability that you can gain 200%? Here we have to remember that. Okay, let's look at this table. Now, if you, for a trade to be successful, you have to make the right buy call and you have to make the right sell call, right? You have to the right time to buy and the right time for you to sell. Then only you can have a successful trade. Like if we are good, we can have a 70% probability of success to make a buy call. And we have a 70% of success when we make a sell call. Even then, our probability of success, a successful trade, is only 49%. So this is worse than tossing a coin. At least when you toss a coin, you have a 50% of getting a head or getting a tail. But this one, even though you can have a 70% of successful buy and 70% probability of successful sell, your probability of successful trade is only 49%. For you to get a more than 50% successful trade, you need at least 80% of the time that you make the correct buy call, and 80% of the time you make the correct sell call. But so how high are the chances that we can do that? So if you do not have to make a decision to buy and sell frequently, then your chances of you losing money will be lower. So this Paul Tudor Jones, he's a very famous hedge fund manager. So what he says this, he says everything gets destroyed 100 times faster than it is built up. So we have to remember that it takes one day to tear down something that might have taken 10 years to build. Okay. So you have to be mindful of that. Luckily, there's one company listed on Bursa Malaysia that invests for the long term, and it is a truly low-risk, high-return company. Okay, this company is called iCapital.biz Berhad. The stock code is 5108. It is the only closed-end fund listed on Bursa Malaysia. In fact, it is statement mission. It is iCapital.biz Berhad exists only for one simple reason. That is to allow long-term shareholders or long-term share owners to benefit from value investing allowing the power of compounding to work for them. Okay? And it's to prove that the serious long-term investing in Bursa securities can offer superior returns. For closed-end fund, there's one very important benefit of a closed-end fund. Probably most people are familiar with unit trust rather than closed-end fund. But on unit trust, there's one major disadvantage is because unit trust fund, the amount of capital the fund manager holds fluctuate very frequently. When the markets are hot, a lot of people will want to buy unit trust. So the fund manager will receive very large inflow during when the markets are hot. But when the markets are hot, the share prices are very high. Companies are selling at a high valuation. But when the fund manager receives a lot of fund inflow, then they have no choice. They have to invest. They will buy company at a high valuation, buy at a high price. Okay? And on the other hand, when there's a market downturn, when there's a bear market, when share prices are falling, then people panic, people worry. So what they do is they want to redeem their unit trust. Okay? When they redeem, then the fund manager have to pay them back in cash. How do they raise the cash? So they have to sell their investment, sell their stock. But during bear market, the share prices are falling, so the company are undervalued, and when they are selling, you are selling at a low price, right? So this is the dilemma. This is a big problem faced by fund manager in unit trust. But for closed-end fund, because the amount of capital is fixed, the amount is fixed, so it doesn't have the problem of fund flow. So because of this stability, the asset manager for a closed-end fund, they can invest for the long term because they don't have to worry that they have to forced to buy or forced to sell. They can invest for the long term and they can buy undervalued and illiquid assets. So research studies has shown that closed-end fund often outperform their open-end fund counterparts.
From 14 November 2020 to 14 November 2025, both the share price and the NAV of iCapital.biz Berhad have achieved impressive returns of 10.18% per annum and 9.07% per annum respectively, significantly outperforming the MSCI Malaysia Index, which fell by 0.98% per annum. On a cumulative basis, both the share price and the NAV of iCapital.biz Berhad have achieved impressive cumulative returns of 62.42% and 54.41% respectively, significantly outperforming the MSCI Malaysia Index, which fell by 4.83%. ICAP is indeed ideal for investors looking for a Malaysia-focused, low-risk, high-return fund.
When we compare the performance of iCapital.biz Berhad with global funds, this is comparing ICAP with other global funds around the world. The same thing. Okay? Taiwan fund is the best performer with nearly 8% return, but iCapital.biz Berhad is very close by. Because Taiwan fund, they can invest in TSMC with this hype on AI. The TSMC share price are surging. But iCapital.biz Berhad only invests in Malaysia. Even then, our performance is very close by, almost equal with the Taiwan fund. If we measure, just now it was measuring in NAV, if we measure it in share price, the same thing. Okay, iCapital.biz Berhad is one of the top performer if we compare with all the closed-end fund around the world. Apart from good performance in share price, ICAP also have a very innovative dividend policy. Okay, what do we mean by that? Normally, if you invest in a normal company, they give you the dividend based on their earnings. But here with iCapital.biz Berhad, the dividend is made of two parts. The first part is a base rate. Base rate, how do we measure it? Is by 1% of the NAV per share. Okay. The second part is a top-up rate. Top-up rate we calculate it by 8% of the difference between the share price and the NAV per share. Okay? Let us look at some example. How do we calculate the dividend? If you like to calculate the dividend on your own, you can always go to our website, www.icapital.my. There's a calculator. There's a calculator. You just enter the NAV, you enter the share price, then they will calculate the dividend yield for you. Okay, you can visit there to experience it yourself. Here, I'll show you an example. How do we calculate the dividend yield? In October, iCapital.biz Berhad declared a 13.88 cent dividend. Okay, and the payment date was 30th October. This is a real life example. Okay, so with 1% base rate is 1% times the NAV. It's 3.8075. So you have 3.81 cent. Okay, and the top up rate 8% times the discount. So you have 8% times 1.2168. Okay, the discount is the difference between share price and the NAV. So it's the share 4-week WACC 2.5907 minus the 4-week NAV is 3.8075. So you have the discount of 1.2168. Okay, so that is the top-up rate, and you add up these two rates together, then your total dividend will be 13.54 cents. This is the total dividend. And with the share price of 2.66, then you have the dividend yield of 5.1%, nearly 5.1%. So this beating the fixed deposit rate. It's not bad. Okay. Now, assuming is a share price fall by 20%. Okay, your yield by the same calculation, your yield will grow higher. That means you receive even a larger dividend because of the wider discount. So you receive a larger dividend. Okay. Now, if the share price, let's say if the share price rise by 10%, okay, although your dividend is smaller, your dividend from nearly 14 cents narrow to about 11 cents, but you will gain from 10% capital appreciation. So what it means is, right, you can, if the share price rises more than NAV, your capital gains will go up. If your share price drop more than NAV, your dividend yield will go up. So what we mean is, you can have your cake and eat it at the same time. For normal companies, you do not know whether the company will give you dividend or not, because it depends on their earnings. But for iCapital.biz Berhad, you will always have a dividend, because the dividend is based on the NAV, and your NAV cannot go to zero. So you always have the dividend with you. Okay? I will pass the next session to my colleague, Mandy.
Long-term investing is actually suitable for young people because you all have a long runway. As you all can see, the longer you stay invested, the power of compounding will work better for you. Because for Warren Buffett, do you all know Warren Buffett, the young students? You know, because most of his wealth that he has now is accumulated or generated in the later part of his life, not the earlier part, because you have a bigger sum now, then the bigger sum that you compound will get even bigger. So what I want to continue on is to say that for iCapital.biz Berhad, Capital Dynamics is the fund manager. So as the fund manager, we are only responsible for growing the net asset value, which means the value of the investments of the assets inside iCapital.biz Berhad. So for share price of iCapital.biz Berhad or any other listed companies on Bursa and all that, it's subject to supply and demand, which is also driven by sentiment of investors out there. So I just want to share with you this quotation from Warren Buffett in their annual report, 1983 annual report of their company. The key to a rational stock price is because we need to have rational shareholders, whether it's current or future. So those who will buy because of value reason will not be selling anytime soon. This is also the reason why for iCapital.biz Berhad, we have been doing a lot of activities, initiatives to reach out to individuals, because individuals like yourself can invest and hold for the long term as compared to institutional investors. Institutional investors would be like your PNB, Amanah Saham and all that, or other fund managers. they typically have a short-term investment horizon because their customers will be asking, hey, how come this quarter didn't make profit? Next quarter, what is the outlook? Whereas for individuals like you guys can put in the money there and then leave it there and then don't touch it and then let it grow. So as a result of our effort through Investor Day, our ICAP fan club, and also our continuous AGM activities, because our AGM, our annual general meeting, which is compulsory for all listed companies, is held on a Saturday. Recently was held in KLCC as well in October. So because of all these efforts and engagement with individuals, our individual share owners have gone up to 3,700. So we want to continue to reach out to people like you guys. And for Capital Dynamics, as the fund manager, we are not a major shareholder of the fund because we don't own the fund. It's just like a collective investment scheme, your unit trust fund. But we have shares. We do invest and buy the shares of iCapital.biz Berhad. We have been increasing our stake in our closed-end fund since 2007, and you can see that now we own more than 3 million shares because we don't have big pockets. So this is whatever that we can afford, and so far we have not sold a single share. This is to tie the interests of individual investors together with the fund manager. So you may ask, is it still a good time to buy ICAP? For long-term investors, definitely a yes, because for iCapital.biz Berhad, it's very clear to understand we don't have any borrowings or debt. You just need to look at our net asset value, whether it has been growing. Guat Meng has shown you, yes. And now we are still trading at the discount to the share price. The share price is about 2.66, and then our NAV is about 3.5, right? 3.5. So that gives you a discount. So whenever you invest or want to buy a house or buy an investment, make sure that you don't overpay. Because when you don't overpay, you already have a margin of safety that will protect you from any potential unforeseen circumstances. So in this case, we have that buffer. And then for short to medium term, why it is now a good time? There's macro tailwind for Malaysia. Of course, we still see some shorter term KLSC correction. As you can see, some of the stocks are not doing well over the last few months. And then the US stock market has been quite bearish as well. But the long-term view, our view on the KLSC is still intact. As you all have attended Mr. Tan's talk yesterday where he shared about our future for Malaysia, he is positive because now we have a stable government and seem to be putting certain things, doing certain things correctly. Plus, with the US-China tension, ASEAN will benefit. You see a lot of FDI coming to Malaysia, and also the China recovery will also benefit Malaysia. And in addition to that, those who look at the US stock market, you will notice that NASDAQ, and especially those AI-driven stocks, because the NASDAQ is held up by the Magnificent Seven. So if you take out all the 7 AI stocks or AI-related stocks, their stock market hasn't really been going anywhere. So it's dangerous. I mean, for investors in those stocks, holding those stocks, they have been sucking up the liquidity from all over the world into the US market. But when the bubble bursts, then you see a lot of outflow of liquidity from US market to other emerging markets especially. So that's why we see that in the shorter medium term, KLSC will be able to attract some of these funds with political stability that we have now in Malaysia. So to sum up, I'm reminded that Q&A is starting already. ICAP is a well-managed fund. We have benefited from rising stock prices, rising NAV, and also our cash holding has declined, which means that we have been increasing our investment, and now we have a predictable dividend payout, and we have London activist shareholders in our fund, but they have been selling and then manipulating the price of ICAP, so they have pushed our share price down, creating a wider discount. But as Guat Meng has shown you earlier, the wider discount that you have, you get higher dividend yield. So you don't have to worry that, just because the share price went down, you're now being compensated by higher dividend. But if you get, if the share price go up, then you're compensated by higher share price, but lower dividend. So this activity of them selling has created liquidity in ICAP for individual share owners who want to buy more, and also because they push down the price, you are now able to buy more at cheaper prices, lower prices. Next. So to conclude, it's a vehicle where long-term, those who want really serious long-term investing, you can put your money to compound for you. And now we have a steady growth and predictable dividend, which means that whether we sell shares or not, because for other company, they depend on earnings. If their earnings has a net profit of certain percentage, then the company will declare, let's say 40% of Maybank earnings will be paid out as a dividend. But for ICAP, we don't look at earnings, we look at NAV because that's the value of the company. So our NAV cannot be zero. And our NAV, as we have shown you, has been rising at 8-9% compounded per annum, which means that 5 years from now, 10 years from now, your NAV, your dividend will also be rising in tandem with the rising NAV. I just want to stop here and then open for Q&A, if there's any. Sorry, I have to rush through this fast because we have speakers lined up. How can a student start to invest in ICAP?
Okay. If you want to invest in ICAP, what you can do is, the first thing you need to do is, you need to be above 18 years old. Okay? You're 18 years old and above, then you need to set up a trading account. Okay? You set up a trading account. You can go to a stockbroking company, or you can go to a platform. Like we have Mumu here, you can open an account with them. Then from there, you can start trading. You can start buying ICAP shares. Okay.
Just to add on, because Mr. Tan Teng Bu, he will also be talking about ICAP in his keynote presentation at 5 o'clock today in track 1. So please attend as well if you have further questions on ICAP. Besides dividend benefits and NAV, what other things can give confidence to shareholder? I think this one, we have received testimonial from our shareholders since day one, because a lot of them came on board in 2005 when we first got listed. Many of them are still with us today because we are very transparent. AGM, we will face all our shareholders. We don't hide. If there are problems, we tell them, and they can also complain or scold us if we are not doing well. Not like unit trust. Unit trust, you guys only can talk to the agents. The fund managers is, somewhere in the office, you don't really get to interact and then give out your feedback to the fund manager. So we face investors directly. That's very, very important. Yeah. Good app to start investing. I think there are many, many out there. You have your Mumu, and then now you have Weibo, and many more. I think just make sure that they are licensed by Securities Commission. Yeah, the rest, I think, up to you guys, whether you have a preference. Maybe just a last question. If you have any advice to young girl looking to be a successful fund manager, of course, we have a women in asset management mentoring program. You can, submit your CV. We want to recruit young talents. It doesn't matter whether female or male, but this program is for the female because we want to get more female fund managers as well in the pipeline. Yeah.